The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
So the makings of a new bull market seem to be well planted in the financial community with new highs. As we look around, they're not hard to find today. The
Indeed.
doubt about whether or not we're going to have a recession seems to be fairly well dissipated. The signs of a recession struggled all year to raise their head above the surface, and they never popped out. And
Correct.
there's still fears, but by golly, you have a hard time supporting them with the way the market is anticipating things going forward. And a lot of that is anticipation is being driven by technology. So a new bull market looks an awful lot like the last bull market. Technology dominated by artificial intelligence. You know, you're told to avoid artificial things like sweeteners are bad for you.
Right.
You know, who wants to eat artificial meat? That didn't work out too well. So, but in technology, artificial intelligence is hot. Let's just say it's becoming extremely dominant in areas that you never would have suspected it was going to pop up.
Right. And it's really looking like one of those technologies that's going to continue to broaden out. It's already bigger than anyone really expected. And now that the generative AI is out, and everybody can try, chat GTP themselves and go see how it works. It's like, oh, that's why this is already happening. That's why it's already in computer coding. It's already in law firms. It's already in, there's ETFs run by AI now. So it's really going into places that medicine. It's going to replace your doctor in a lot of places. So on the diagnosis side, anyway. So it's really big. It's going to be a huge change. And I was reading an article about how you can actually kind of miss that if you're not really paying attention. And they were actually using, instead of AI, they were actually just looking at a tech company, just looking at Netflix and saying, from 2009 to 2020, what would you have bought Netflix? And if you were looking at Netflix based on traditional measures, specifically PE ratios, the answer is no. You wouldn't. So
not on your life.
No, it was never even reasonable, let alone looking like something you should buy. The average PE ratio from 2009 to 2020 was 165 times earnings. 165 times earnings. People start to get queasy once it gets north of 30 times. It's like, that's not supportable. 165 times earnings. And guess what? It was a screaming buy the entire time. And if you were paying attention only to PE, you never knew it. But during that time, during those 11 years, for every $1,000 you put into Netflix, you made $66,000. The stock was up over 6,500%, 6,500%, and the PE ratio was nuts high. That's because they were doing something nobody had ever done before. Nobody had ever had this big content producer, which they became, and they stream it all themselves. What do you know? A one-stop shop, and they couldn't sign people up fast enough. And so you've got to, AI is going to be a real similar thing. There's going to be big changes coming. It's going to drive things in places that have never been driven like they have before. And you don't want to miss it because you're looking at traditional metrics that might look completely crazy. It might look like, well, there's no way to buy this. And it's very important to look at the business proposition first in these tech cases and say, well, could this really be one of those solid gold home runs? And if the answer is yes, start tracking like we do. Start tracking prices. What's the price telling you? Is the price going up? If the price is still going up, even if the PE is crazy, it's like, okay, it's going to buck that trend and things are still looking good. So don't write it off because of traditional fundamental market metrics, which just may not reflect the potential growth in a lot of the tech areas.
Well, in looking at Netflix, if we go back into the low in 2022, it was below $200 a share.
Ah,
And this week it is starting out almost at 500.
correct.
That's a
Correct.
big move in a fairly short period of time. Now it's not close to its all-time high,
Right.
and but is it reasonable to assume that it will continue this current rally, which is a pretty accelerated rate of return from the recent low? And the answer is yes, because one of the things that Netflix has been burdened by has been the password sharing routine of families.
Correct.
We apparently have a very high ethical standard among U.S. citizens and non-U.S. citizens who think that I can pay for my membership and give it to anybody I want, and they can
You
all
can use
benefit
it.
from it.
That's it.
I'm just a nice guy. Well,
Right.
they've put their foot down on it. One of Fox's business anchors had to admit she'd been on a share system, and she finally got caught and had to start paying. Well, that process of enforcing passwords is going to massively increase their revenue stream,
It
give
is.
them more ability to expand their the product offerings that they have. So even though that particular stock looks extended on a PE basis, it probably has much further to go. Uh, it's just, well, the point you made is what drives our decision making, is that's what the price tell us.
Correct.
Forget about the financial analytics. If somebody wants them, we subscribe to a data service that looks at fundamentals, looks at the earnings ratios. The 20 major factors that a fundamental investor, long-term buy and hold type of person is going to look at, the
Correct.
AAII member. But the reality is that the price is the only thing that matters, because it is a summary of every analyst's opinion in the world. That's what's
Correct.
real today. And the trend is what's important. Is it trending up, trending down, or trending sideways? Where do you want to enter, and how long are you going to hold? And that's a function of what the numbers on the chart basically tell you is today's reality, and if it's likely to survive tomorrow. And
And
these kinds
that's
of
what's really important. Yeah, that's what really important is what is today's reality. And if you're looking at something like Microsoft between 2009 and 2020, and the reality was the PE ratio is crazy. It's crazy high. And we it's not that we never look at that stuff. We do. You want to see that. You want to know, hey, is this easy pickings here, or are they going to be swimming upstream here? Is this going to be difficult? But you never discount it because of those traditional metrics. If they're still making money, if they're still attracting cash in the market, and if people are still buying Netflix and the price is still going up, that's the most important thing. That's the thing that you need to follow, because the rest of it can sideline you for reasons that don't really count because of the way markets get disrupted these days. And when somebody like Netflix comes in and figures out that, you know what, it doesn't really, nothing matters but the number of subscribers we can attract. Let's just work on that. And that's all they did. And they just exploded. And so that PE ratio became completely irrelevant, but you had to be willing to say, I don't care what the PE ratio is. Look at how much return we're getting here. And that's the only important thing. And that's what you need to be able to do. And I'm feeling like the same thing is about to occur again with artificial intelligence. It's going to be so disruptive, it's going to be so pervasive, and it's going to absolutely revolutionize industries, change the way they work, change the economics completely of what used to be. So how things used to look is not going to matter. It's not one of those things you should get hung up on. You should be looking at, are they making money? Are they attracting cash in the market? And if they are, follow that in. And as always, the caveat is don't get too carried away, because in a disruptive market, it can go south just as fast as it can go north. And somebody can get on the wrong side of technology, or even have a good idea, but completely get disrupted by somebody else, which is why we own funds and not individual securities. You don't want to get caught with one great performer and then have somebody else just blow them out of the water, which is possible when an industry is just coming online. And it's almost impossible to figure out who the winners and who the losers are going to be, and how big it's going to be. You just have to follow along. It's going to be very exciting to see where AI goes.
Well, the disruptors, in case in point, we just go back and look at Microsoft and with Bill Gates. I mean, he disrupted IBM, who
Perfect.
had dominated the computer services and computer generating businesses.
Sure.
Um, but his introduction of DOS and refusing to sell it. In fact, if he had sold it, they probably would have just put it in the can and
Never
not
would
done
have seen it.
anything with it. They never would have
Sure.
seen it. He would have
That's
been offered some outrage, what at the time seemed like an outrageous bucket of money, and allowed to work on it for a couple of years, and they finally would have let him go when his contract expired.
right.
And we never would have seen Microsoft and Windows. There are people who would say, "Well, I wish I'd never seen Windows anyway."
Correct. That's true. We've all had
there
that day, right? Yeah.
That's true. But then there's an awful lot of IT people who are employed because the problems that are still inherent in Windows, and those problems are going to be all relived all over again with AI. I was watching
Correct.
an interview with a consultant today on AI, and he said the problem with the current generation of AI, which is an early version, and it's not the
Sure.
first, but it's an early version. He says it really cannot distinguish the word not and what not means. If you tell it, you want to create an image that is not exactly like somebody, well,
Right.
it's going to create an image that is exactly like somebody because it doesn't know how to reverse the instruction with the word not in it. And
Right.
that becomes a significant problem for copyright issues, trademark issues, plagiarism issues, not giving
Sure.
proper quotation on it. So we can't just assume that the individual is going to step into Chat GTP or the what does Microsoft call theirs? They've got the startup on it. Um, their help screen for it. In any event, just an
I got to.
inexperienced
It's
user.
integrated. Integrated into Bing, into their search engine. So
So an inexperienced user just relying on this and thinking, well, I just expanded my IQ by threefold or four or whatever. I mean, it's
right.
going to create some significant problems. And a large part of the money that's going to be spent on AI these next couple of years is going to debug the errors that are present in the core program. Even
Correct.
OpenAI knows they have to spend more money to refine the way it works. And as you went through the scenario of the different industries, a lot of these things are fundamentally simple enough that it can go through there and not make big mistakes. Well, you mentioned the medical industry, reading
Sure.
X-rays or MRIs. It
Yep.
it does a much better job than physicians typically do. So it's still not 100%, but your risk of mistake is far lower letting AI do the scan or interpret the scan.
And one of the most important things about the speed with which it's going to happen is that now that machine learning is a part of more than just AI, machine learning is a part of robotics. It's a part of just the tech world in general. So every time take your every time an AI software program scans an MRI, it learns how to do it better and it remembers exactly what it saw. Every single one of them goes into its memory and it gets better faster. And that's how it's going to happen, and that's the way things are going to change, and that's why the changes are going to come so much more quickly. That's why one of the examples was Tesla. Who knew that there was going to be an automobile manufacturer? We're talking old line manufacturing. Automobile manufacturer going to be priced like what? A software company. Why? Because it's software driven, not hardware driven, even though they make cars. So that's the kind of switch that ends up happening, and that valuation is not because they make more cars. They don't, but because they're priced like a software company instead of a hardware company, old line manufacturing company, their valuation can go off the charts compared to what Ford or General Motors can be, because Ford and General Motors, while they use software, they're not a software company. And those are the kinds of things that are going to change in the tech world. Those are the kinds of things AI is going to change, and it's going to be driving things, like I said, in different directions and at way different speeds than we're used to. So it's an exciting time to watch that unfold, and it's a great time to be ready to accept some new things coming up, and of course, always watching it with your full attention just to make sure it's heading where you want it to go.
Well, you and I both drive GM products and have for years. When we get a notice of a recall, they've got to fix something. We
Yeah.
have to call and make an appointment, take the car in. Tesla sends a computer code down to the computer, and it generally fixes it. And it's done.
So
And
often. Yep.
it happens around the world. It's not one user at a time coming in through the dealership. That's software. And of course, Elon Musk, love him or hate him, has taken the core of what they've learned in doing that and is applying it to all of his other enterprises at the same time.
Correct.
Extreme innovation. And that's one of the things that's fascinating about this next bull market is that we're going to see companies come from out of nowhere,
Yep.
seemingly, and all of a sudden become dominant players and get priced at unreasonable price earnings, price book, um, profit margins. It's going to make no
Yep.
sense from a fundamental standpoint. And that's where trend following and tracking prices on a chart makes sense because you see these things develop. And what for trend followers, momentum investors, they see
Yep.
breakouts. They say, well, why did that happen? I don't know. But suddenly my term for it is that particular issue, that stock or that ETF has
Yep.
become a magnet for money. And if it's a magnet for money, investors are flowing into it. They're pushing the price up. You probably want to consider being on that train. Now, how long do you stay on? Well, you stay on until it loses its magnetism, and all of a sudden, investors are bailing out of it. And you
It'll let
mentioned
you know. Yeah.
you mentioned we don't use individual stocks in our portfolios, but ETFs for safety purposes. You take a look at a stock that just recently had the CEO in real trouble, ADM, Archer Daniels Midland, and the
Mhm.
stock just now this is not AMD, it's the same three letters but in a different
Right.
order.
Right.
ADM, Archer Daniels Midland, and the CEO just really messed up, and the stock tanks. And if particularly if you have limited capital and you only own a half a dozen or a dozen securities, that may be real damage to a portfolio. But
Yep.
your ETF owning anywhere from 20 to, well, in some cases, the big indexes will own a couple thousand stocks. That one stock happening is not going to destroy your financial plan. The question is
That's important.
how do you get started and what do you do and how fast do you run? And particularly for young investors, it's important to watch diversification and have your process. We use process, rules-based process to make decisions as opposed to gut reactions to the news. Headlines are bad news. You just simply shouldn't be buying on headlines because they won't tell you when to sell. They will tell you should buy everything they talk about on the news.
Right. All the time.
Yeah.
Bye. 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 Yeah.
Unless they're reporting what is obviously already known, the really bad news, and you're going to wish I had never owned that one in my portfolio. Or you'll say to yourself, I'm glad I didn't buy it. But that's not a systematic process for building a portfolio, accumulating and protecting wealth. If you want to know how we do that, give us a call. Our email is in this screen that's just popping up, and we'd be glad to talk to you about how we manage money and whether or not it might be appropriate to help you. Until next time, have a great day.